Okay, guys, so this is very simple. Let's concentrate. I've been getting a lot of DMs because of the news, the US Venezuela news that has bumped up. But we are still within our confluence, so no panic. We cut from this is where it started from. We cut this buy from here to here. This was a clean liquidity in the 30 minutes clean. So this buy was perfect. We caught another one. It went up, came here to tap in this zone and then went back up. Then we were expecting it to hit here, which because it's a 0.6 into the 0.7, if you draw the Fibonacci. So it was going to come retrace to this point, which is the originator of, and then move up. But then gold retraced back to our entry, and then instead of going back, no, it's extended to take liquidity beyond the entry. Okay, so we cut from here to here, we took profit, that's okay. It went back here, instead of sticking here as a support, it broke and then took liquidity below this area. Okay, it went back up, came to test the same zone, came back to test the same support. This is our original support, all right? But so this is a confirmed liquidity sweep that's helped this whole move to go. So now we are expecting, because our initial target was here, and then it retraced from here to here. You know that because of this liquidity sweep, this was going to continue here, but this was a very strong supply area, and there was a gap around this area that we're also expecting to be covered. So the moment it got here, we took profit from here, put a sell limit here, stop loss right on top of this zone, and then it actually reacted the same way, came back to cover the gap, and then hit our take profit also around this area. And then the original plan, because we were already in a buy from here, we knew that when it comes here, after it covers the gap, it was going to go up. So we were actually like literally in a buy. All right, so this is where we are now. We are currently here, but then mind you, look, using this as a yardstick, okay, it moved from here to here. Instead of retaining the power here to go up, it's extended to take liquidity, and then there's more liquidity here to be taken, but this also didn't extend to this because I just covered the gap and then tapped into the zone and then started going up. All right, so my prediction now, this is my prediction. Gold is going to go back up, okay, go back up like this. It will confirm. This is a 30 minutes bullish engulfing that I'm hoping for. I'm looking at. It will confirm bullish here and then extend to this point. But when it gets here, it's going to retrace back to our entry. It might, because of this liquidity, that's why I extended our stop loss from the support that we had here. Because of this liquidity, there's a lot of liquidity here, and whenever we expect gold to trend, especially if we are targeting another all-time high, we know that definitely gold will come for some sort of liquidity. If it doesn't come, fine, well, we're already in a buy. If it comes, we know that we are safe. So be careful when entering from here, around this area. Anytime you enter this, any entry you make here, make sure whenever it moves about 10-15 pips, you close the gap and you just break even, so that when it comes back, you can still have space to, unless you have a big enough account, then you can allow it to run. Your stop loss, this one will not go beyond the stop loss. It might go beyond this line because there's a lot of liquidity around here to be taken, especially this area. All right, so this is a clear 30 minutes shoulder, and then another shoulder, and then head. All right, so this is a confirmed head, neck, and shoulder in the 30 minutes time frame. So we are going to go all the way. Our initial target was this point, but I've extended it to all-time high again because of the Venezuela US issue. So metals are going to be going very high. So just target the all-time high again, but this time around, make sure you are ready for liquidity sweep, because the moment gold hits this mark, 4346, it's going to retrace back, and if it retraces, it's either it stays at the entry level, or it goes beyond the entry level to take this liquidity below this entry levels and then go back up. And this wick from here to here is going to just be like a 5-minute candle. Just come straight up, take liquidity, and then go back up. So you just see a wick around here, but it's definitely going to clear everything, every demand or every stop loss around here, just to go back to all-time high. Then this time around, when we get to this point, there'll be a retracement here as well. It might not be necessarily be strong. When we get to this point, there'll be it will not be this very strong. But the main retracement will be here. Very strong retracement from here to here to move about 60 pips. I'm sure about 60 pips from here to here, and then stand back up and move up. The moment we cross this line, we know that we are going for an all-time high. So just be careful when you are trading these kind of situations, especially there's going to be a January first quarter is very volatile, and if there's news and we expand the trend, you know that it's going. We're already in a buy. Don't panic. We're already in a buy. So if it doesn't come back here, we are good. We just wait for a confirmed entry here, and then we continue our bullish trend. But expect it. It happened where? It happened at this point. At this point. It happened at this point. It's where do you get the all-time high? This is the all-time high. This was the previous all-time high. Okay, this was the previous all-time high. Okay, right. So it moved from this zone, went up here, closed here. Everyone was expecting that the gold was going to continue up, and then it just dropped, came back, cleared the liquidity below here, and then went back up. And then this time went straight all-time high. Okay, there's another one at this zone, the same way. It started a trend. We go here. This, I think I remember taking this buy. We went, it closed here. We were hoping for, it came to clear everyone and then went back up the same way. So that's how gold behaves. It will definitely come back to this entry level. If it doesn't, good. And if it comes, I'm sure it's going to extend to clear this liquidity before going back up. So just be sure of what you are doing when you are entering. Be careful of your entries, and when you enter, make sure you when you are around this zone, if your entry is around this zone, the moment it moves, you close the gap to minimize your risk, and then wait for a retracement down here, because the actual move is here. The actual move is the retracement. I'm waiting for that move to get to this point, then I enter for a bigger lot. This around here is just about one lot or so. So I'm waiting for it to come back here, and then I enter for a bigger lot so I can actually catch the wave going forward. And then the moment it takes that liquidity, you should expect that any sort of retracement is just going to be a minor break and retest, and then break and retest, and then it goes all the way to an all-time high. That's how it's going to be. All right. Peace.